In this support and resistance trading masterclass, I've included everything that I have learned over the last 15 years being a trader when it comes to support and resistance trading. And especially we'll focus on the question, will a support and resistance level hold or will it break? Which is essentially the most important question that you have to ask yourself when dealing with a support and resistance level to make the right trading decision. And I've included 9 very interesting step-by-step trade and chart studies. We will go from easy to intermediate to advanced chart and trade studies so that by the end of the video you will have a very deep and comprehensive knowledge of trading and understanding support and resistance levels. And I've included chart and trade studies from all the different time frames. So whether you use the 15-minute, the 30-minute, the 1 hour, the 2 hour, the 4 hour or the daily time frame, you will be able to use this knowledge in this video and apply it in your own trading. So let's start with a very basic and straightforward example first, and then over the video we'll go into the more advanced topics later on. And we're looking at this chart and here's a very clear resistance level, right? The market moved higher, turned around here, came back, came very close to the level, turned around, came back into the level and is now showing us a reaction. So we have a very clear resistance level. And the next time the market is going to be at the level, many traders are going to ask themselves, will the level hold or will it break? And that's obviously a very important question to make the right trading decisions. So how do you know whether such a level is going to hold or break? And the concept that we're using in trading is called stacking confluence. And this is probably the most important concepts that you will ever learn when it comes to building a trading strategy and really trading with a robust trading strategy. So when we talk about confluence, we are talking about signals or factors, criterias that speak for the trade idea. So when we look for a breakout, then we're going to look for confluence factors that speak for a breakout idea. What speaks for a breakout idea? It could be momentum, it could be price action, it could be the higher time frame, it could be an indicator, and there are many of those clues that we will be able to pick up from a chart and that will help us assess whether we have more positive confluence, so more things are speaking for our trade idea or not. So let's put this to a test and let's put this to practice and then it will become much clearer. So coming back to our example, what is the situation here? And right now there is no way to tell whether the level is going to hold or break. And we haven't done a proper analysis yet, so we don't know. And it is probably more of a 50-50 chance right now whether it's going to hold or break. So let's take a look and see what we can find analyzing this chart. And when we zoom out, you can see, okay, we are in a huge uptrend. And this pattern now looks like it is really building up steam. I've made many videos about this so-called build-up pattern, and there's a lot of pressure building up. So we could say, okay, we have a little bit more bullishness that is speaking here for us. We have this uptrend and we have the consolidation, which seems like a very normal market behavior in an uptrend. So we could say, okay, maybe the likelihood of breaking increases a little bit. So instead of being 50-50, we could maybe put the odds a little bit more in the breakout area. And obviously those are just rough estimates, and the point of this is not to give you accurate numbers, but to just show you what gives you a positive confluence, what makes a level more likely to be broken versus holding. So let's keep digging. And we also can apply the higher time frame moving average. So we are on the 1 hour chart and we are using the 4 hour 50 period SMA. And we can see that we have a moving average rejection, which is really good. In an uptrend, the market trades above the moving average. We dipped below it, but came back above it. And then the next time actively rejected it. And you can see now we're trading back above the moving average, which is a bullish signal because in an uptrend, you want to see the market hold above the moving average. So we can say, okay, this further puts it a little bit more in our favor of the level breaking out. So we only have 2 confluence factors, but we can see it's really nicely shaping up. Let's keep digging. And when we zoom in, we can see a microstructure, and this is a bullish microstructure. We see that during this correction phase, the market sold off first. It put in here a double bottom and the market was not able to break below that. And then we broke above this intermediate and this range resistance and retested it as support now. So we have already seen that resistance is able to become support in this pattern. So this puts the odds a little bit more in our favor again. And this here is a very important clue. This is a breakout buildup, a very strong pattern, and you can really see how the market is holding into the level. It's really pushing into it, and it seems like whereas previously the market was easily able to move into the level, now the market is not able to move at all lower. What does that mean? It means that the buyers are really strong, the buyers are buying up all the open interest, and there are pretty much no sellers left here to drive the price down. So there's a lot of pressure building. And then here, the final piece to the puzzle. And you will see during this video that actually seeing how is the price action forming around a breakout level. Are we seeing momentum coming into the market? Are we seeing the market slowing down, increasing in size? Or is there deceleration maybe, as we will see later? That is a very, very important piece of information. And here you can see the breakout candle is really strong. We have a very, very strong breakout candle. And when we zoom in, you can see we have a wick to the downside. This shows us that at the beginning of the candle, the market was rejecting the level, and then it pushed up and closed all the way at the high. And you can see we've never seen such a high close now in all of this range market and in all of this trending market. So that's a very important piece to the puzzle. This really puts the odds into the side of the breakout traders. So at this point, we have done a fairly decent analysis. We have looked at the higher time frame, the bigger picture, the moving average, the microstructure, and we have a strong momentum candle. So this makes a breakout and now the level being able to hold as support very, very likely. And when we skip forward, and we can see that the market did follow through, and you can see it released a lot of pressure. This is very typical for those build-up situations. There's so much pressure building up here, and then it's being released as the last few sellers are withdrawing from the market, and then there are only buyers left. So this was obviously a very basic and straightforward example. And now let's take a look at a little bit more intermediate or more advanced concepts. So next example, we are looking here at a resistance level again. We have seen it being resistance just here in the past, and then the market traded around it here, respecting it as support here. We have a flip, we have a resistance, and also some activity around here. And right now there's no way that we could assess whether it's more likely that we see a breakout or the level holding. So we're starting with a 50-50 chance again. But let's make our way through all of the charts. And when we zoom in, you can see we have a very bullish sequence here. This could signal that there's a lot of bullish pressure here in the market. And you can see I only increased the likelihood for this giving us more of a bullish and a breakout edge here a little bit, because such moves are sometimes also unsustainable. And a lot of people are probably looking at this level and thinking about profit taking. So it is a little bit of a bullish factor, but not really a lot. So we have to dig further. And now you can see we have a bullish breakout, and now you can see, okay, this looks really good. We can increase the likelihood of the level breaking a little bit further. Now you can see the next candle, we have a retest candle. The market moved all the way to the low and then traded higher and closed here. So this is a bullish signal again, and it increases the likelihood for the market now being able to hold and break the level above it. Now things change a little bit, and you can see I decreased the likelihood of the level holding, and now we're dealing with a deceleration pattern. This is a 3-candle deceleration pattern. The market moved higher. It showed us this candle, which previously looked like a rejection pattern, but now in this context, it looks like a deceleration pattern. Because we could also put this wick into the context of the market seeing more bearish pressure. And this candle confirms it. And you can see during all of this uptrending market, there was never such a strong bearish candle here. So this really changes a lot. It could just as well be the beginning of a retest pattern, and the market will be able to turn higher later. And so we are not fully now bearish, but I would be a little bit more cautious seeing that. And when we go to the lower time frame, so we go one time frame lower, we are seeing now here the lower time frame exhaustion pattern. If you put an RSI on a stochastic, you're going to see a divergence here. You have a double top here, and in general, this is a very, very strong exhaustion pattern. Now, a few candles later, you have the breakout, and now I would say everything changes completely, because now the market is not able to really follow through, and ideally you would like to see the market make higher highs, obviously, so that what we have previously seen on the higher time frame actually looks like a break and retest pattern. But now you can see the market is breaking below the lows on the lower time frame, below the moving average, and we are exiting this pattern. So this changes now the dynamics completely, and now I would say it is way more likely that we're not going to see a follow through to the upside, and it's very likely that we're going to see a move to the downside. And when we go back to the higher time frame, you can see now the fake out is really clear. At this point, probably a very few traders are going to think about that. There's going to be a high likelihood that the market is going to go higher and really take out the level. So this level has really proven to be a very strong resistance level. And if we go forward a little bit, you can see after the fake out, the market really fell through and the level held. We have a classic fake out pattern here, and that's a very important signal. And I have a few more studies later that will help you with that. This is a very interesting example because we're going to deal with such situations many times in our trading, and we have a very clear support level. The market used it as support here the first time, then here just recently, and now the market seems to be on the way back to this level. So what can we see when we zoom in? First of all, when we zoom in further, we could say, okay, the market has been in an uptrend, and this could look like a distribution pattern. A distribution pattern is a pattern where the powers shift from a more bullish market here on the left to then a neutral market, and then possibly the buyers taking profits, exiting their trades, and then potentially the market is going to fall lower. So I would say there is a little bit of an increase in the likelihood that we're going to see a breakout versus the level holding. But it's obviously just a start. So let's see further. When we zoom in and add, for example, now the monthly pivot points, we can see that the market is actively rejecting pivot points. So you can see, whereas previously the market used the pivot point from being resistance turning into support, here from being support turning into resistance in a downtrend, here rejecting it, trading above it, coming back below it, and then here again we have support turning into resistance. That's a very, very strong signal. And very often when you see those types of changes from being support turning into resistance, you will often see that this is the beginning of new trending moves. So we can see again, although we are still trading above the level, we are seeing a lot of bearish momentum, and we could say this increases a little bit more the likelihood of, when we get there, the likelihood for the market breaking the level increases slightly. Now you can see the market is actually trading into the level just a few candles later. The rejection held, the market followed through, a lot of bearish pressure, a lot of selling has been going on here for quite a while, and the market is at the level, right? So now I would say this is a fairly interesting situation. We have seen here a little bit of a rejection. The last candle was a pin bar, but the candle now that we're seeing following the pin bar looks a little bit more bearish, and it closes actually below the level that we marked here. If you are a breakout trader, I would wait for a little bit more of a confirmation that we are actually able to break below such a pin bar. I would say it is more likely that this level is going to break versus hold. However, considering a trade, I would always wait for the market actually being able to make a lower low. Zooming out, remember, there is a lot of space, so there's no urgency here in the trade. You don't need to be the first one in the trade. You have the luxury of being able to wait because there's so much space here. And if we really break through and if the market clears the level, there's probably a lot of room here for the market to move. So no need to rush. And we could wait here a little bit longer for the pin bar to be cleared. Now things change quite a bit. And I would say at this point, the likelihood of this level holding is actually higher than the level breaking. You can see we have a trend that has been going on 1, 2, 3, 4, 5 waves. So this is a complete Elliott wave cycle. We also see deceleration happening. We see we have a rejection pin bar here that I've talked about just a moment ago. Then here you can see you have your first pretty much inside candle, and then you suddenly have more bullish pressure. During all of this downtrending phase, we have never seen so much bullish pressure. Although granted it's still the beginning, we still have a lot of bullish pressure in the market that we haven't seen in the past. So now the likelihood of this level holding would increase significantly for me. And by the way, how do you deal with such situations? And also the last one, sometimes it is okay to take a breakout trade because everything is pointing towards the level breaking. That's totally fine. And then maybe 1 or 2 candles later, you see that the market is shifting and now it looks like the level is not going to break and the market is actually reversing on you. And one of the most important traits of being a successful trader is that you have mental flexibility, that you not get married to your trades, that you are able to react and respond to when something changes in the market. Amateur traders often freeze and they are going to hold on to their initial trade idea. They don't want to exit their trade for maybe a small loss, and they're going to risk having a large loss even though the chart is not going to look like it will follow through on their trading idea. So this is very important. Sometimes everything will look great in the beginning and then just a few candles later things change, and then it's up to you. That is really where it shows whether you are ready to become a professional trader or not, if you can respond to the market changing. We can add, for example, now the daily pivot point, and since we are moving into the lower time frame, the daily pivot point is really helpful, and we can now see that whereas previously the market was trading below the pivot point, we are now trading above it. So this could be the start of a bullish trend. Now, a few candles later, I would say that now it's very, very unlikely that we're going to see a reaction all the way below the lows here. And it's very unlikely that the level is going to break after that, because now what has happened? We see that we have an active pivot point rejection. The new pivot point for the day moved up as the price has moved up higher. And now with those candles here, you can see the market moved into the pivot point, try to break it, and then turn around. So we have a very clear rejection. And you also have a continuation breakout. We have the wicks here to the downside. There was bearish pressure coming into the market, but the bears are not anymore in the majority. The bulls have clearly demonstrated that they are the dominant force. And here with this candle, we are breaking above the previous highs. So very strong continuation signal. I would say at this point, now the odds are very clear. It's unlikely, it's not impossible, that's very important. Nothing is impossible, but it's very unlikely that we're going to see a breakout all the way below the lows and then through the level. Now it's very likely that we're going to see a further continuation higher, which actually happened here a few candles later. Next example, we are going to look at a resistance level. Once again, we have seen it being resistance here, we faked it out here, and then we used it as a resistance level here. And now the market is coming back to it once more. So let's analyze this situation. So we are having a bullish sequence. The market has been rising for a few candles here, a lot of bullish pressure, and you can see we have a lot of momentum here. So you can ask yourself, is this now bullishness? Or does it increase the likelihood that some traders are going to take profits at the level, which would then mean the market is going to reverse? At this point, obviously, we don't know, but it looks very bullish. So let's keep going and let's see what happens. So the market actually went neutral. After the strong buying, the market just went sideways, very similar to what has happened here previously. And it's always important to just zoom out and look back at how did the market respond the last time. What was the pattern we saw? What was the momentum we saw? What was the volatility we saw? How long did the market trade underneath or above a support and resistance level? That's very important and very insightful. Because now you can see we are trading below it, we are doing something like a double top, and we have seen the exact same thing here happen before the market really collapsed. So now it's really hard to say. I wouldn't be long, but I also don't want to be short here. I would say it's a 50-50 chance whether we're going to go up or down, but let's keep going and let's see what happens. Now just a few candles later, and as so often in trading, the solution to most of your problems is just wait one more candle. If you're not sure what to do, wait one more candle. If you are then not sure, wait one more candle. And often either it's going to be very obvious or you wish you wouldn't be in the trade anyway. So wait one more candle and now things change really, really dramatically. Now things look like the last time we were at the resistance. We had the pattern, we have the double top, and we are leaving the pattern with strong momentum. At this point, I would say it's really likely that what we have seen in the past at this resistance level is going to play out in a very similar way. Again, it's not unlikely, and that's why I would say it's 60% chance we're going to move lower, 30% chance it's going to move higher. In trading, it's always very important that we remember nothing is impossible, because we need to be humble when it comes to our position sizing. If you only believe that there's no way that the market is going to go higher and it must go down, then probably you're going to oversize your trade and you're going to take too much risk. Your position size is too big and you're going to run into problems, because maybe this is going to work out 60 out of 100 times, but it's going to fail. The market is going to go higher, and in such cases, you wish you would have had a normal and moderate position sizing approach. And you can see it did move lower, it did held, and everything played out. And so a very interesting situation once again. So now we are starting with an inverse head and shoulder pattern. We have the left shoulder, we have the head here at the bottom with a strong rejection, and then the right shoulder here. And here the neckline is our resistance level. And generally speaking, a inverse head and shoulder is considered a bullish continuation or breakout pattern. So I would say the odds of this level breaking is a little bit higher than it is that the level will hold, but at this point I would not get into a bullish trade at all. I would wait a little bit and see how are we actually reacting at the level. Because you can see we are waiting for what is the market doing at the level, and this is deceleration. We have strong candle after strong candle, and then suddenly the momentum is gone. Whereas previously there was so much bullish pressure, there was so much bullishness, and suddenly from one candle to the next we have no more bullishness at all. We have two doji candles, which is a neutral candle, and then we have strong selling coming into the market. That is not a bullish sign at all. Of course, it could be that we're moving higher, pulling back, and then breaking out. Totally fine, but at this point I would say it's not super likely. Again, I would not go into a trade yet because I don't have a specific signal or a pattern or a breakout, but I would say it's a little bit more likely that this level is going to hold and we're going to see further bearishness. When we just wait a little bit longer, it looks like we have a break and retest. And at this point, I think it's very, very likely that we're going to see a move to the downside. Now, after the deceleration, the market moved lower, moved back into the dotted line, which is a very strong previous support level. If we go to the lower time frame, in a moment, we'll see that support seems to be turning into resistance. And this could look like a break and retest pattern. See, this is how it looks on a lower time frame. The previous support level here, after here the lower highs and another lower high and another lower high. We broke the level here, we came back into the level, it now held as resistance and we're back at the lows. So at this point, I would say it's really likely to see a bearish continuation if, and that's a big if we get a breakout below the lows. So that would be my final piece to the puzzle. Again, I would not be long at this point, I would also not be short, but I would be way more interested to getting short if we break this low, which happens here. And at this point, from my experience, I would say this is a very common breakout pattern. I would say it's very likely that we're going to see a move at least here into the previous lows where this demand or supply area was created on the way up. So this is a very, very high likelihood that we're not going to see a breakout anymore above the highs, and we're going to see, at least for now, a move into the lows, which did happen. You can see we moved into the lows, we surpassed here the supply and demand area a little bit. And that is a very interesting situation, how we go from higher to lower time frame, use deceleration, pattern breakouts, break and retests here, and then really come to a sophisticated trading idea. So what do you think is going to happen here? We have a very clear support level, first established here, second touch point, and then here we are back at it a third time. Obviously right now, there's no way of knowing will it hold or will it break, so we have a 50-50 chance, but we're going to do our analysis and see where are the odds, what is speaking for a breakout, what is speaking for the level holding. We zoom out first and the big picture tells us we are in a downtrend. The market has been moving lower and now it's putting in a consolidation or a correction phase. And this is a very normal market behavior, which you expect after a big move. A lot of people have made money, so there is some profit taking going on. Also, probably more people are interested in buying as the market is now low, and the buyers and the sellers are now battling it out to see whether the market is going to continue on the initial downtrending phase or the market is low enough for the buyers to reverse it. But overall, I would say this speaks a little bit more for more bearishness to come, since we are in a big picture downtrend. We add a weekly pivot point to the charts, and now we see that the pivot point structure is bearish. A bearish pivot point structure is characterized by, first of all, the market trading below a pivot point and also actively rejecting pivot points such as here and here. You can see the market did try to break out. We had here our head and shoulders pattern right at the pivot point. We broke below it, retested it as resistance, and now we are back at our support level. So this here is a very bearish pattern overall, and this is often found in a bearish market. So this increases the likelihood for more bearishness and for the level breaking a little bit further. I'm adding a higher time frame moving average, the 50 period SMA, and what you can see is we also have rejections on the moving average. The market broke below the moving average here, which signaled the beginning of the downtrend. Then here we have our first consolidation into the moving average, rejecting it with a pivot point. Then here further again, we tried to break out, the market tried to reverse higher, but the sellers came in, drove the price down, and continued the bearish structure and the bearish trend, which is overall a very strong indication that there's a good likelihood the market is going to break out. Zooming in to analyze microstructure, we can see we have a double top here with a very active rejection. The market tried to push into the previous high, tried to close above it, and then within a few next candles, the market was reversed. This is the head and shoulder pattern that we observed on the big picture with the pivot points and the moving average. And now we have a lower bounce, so the market is really strongly trading into the level. We have now an active breakout. And of course, at this point, there is still the chance of a fake out. We are going to see fake outs quite often, and very often those things will also turn around and turn into a fake out. So what are we going to do with this right now? Breakout traders are now very likely to get in, which I think is the right call here. Also, a lot of traders are probably waiting for the retest to see is support turning into resistance. I've been trading breakouts and retests for more than 10 years. And I can tell you there's no right or wrong answer. What is better, a breakout or a retest? You can definitely make a case for a breakout. You can also definitely make cases for retests. It really depends on your trader personality. What do you feel comfortable with? What do you feel drawn towards? What makes sense to you? And if you're a breakout trader, this is a good time to get in. Your stop loss is probably going to be somewhere up here. If you are a retest trader, then you can wait for the market to move higher and then give you a pattern. And this is what happens a little bit later. You can see the market is pulling back a little bit, giving you here this double top and also allowing you here to draw a trend line. And at this point, there are two trading plan opportunities. First, you wait for the market to fall back above the level. If the market falls back above the level, this is going to look like a fake out. And at this point, more people are going to go long for a fake out trade. However, as long as the market stays below that, the likelihood of the level holding is much, much higher. As long as the market is not being able to break above this, the bears are totally in control and the continuation to the downside is way more likely. So we can make a trading plan. We draw here our trend line and we also mark the low. If this is broken, then the continuation is very likely. The breakout traders who got in here now are sitting on a break-even trade, and they have to wait it out as long as here the consolidation takes on. I don't think you can make a case for a bullish trade right now, since we are trading below the previous support. The bullish scenario would only unfold if we get here above it. The bearish case is way more likely, and I think the bearish case is now in play. However, if you haven't gotten into the breakout, I would wait for the market to go here below the lows and then continue. Which it did happen. You can see the consolidation took a while to unfold. But then the big picture downtrend that we've seen in the beginning is continued on the way down. So you can see how we got to the conclusion that after zooming out, seeing we are in a big picture downtrend, the breakout was more likely, then seeing active rejection of pivot points, the moving average, the bearish microstructure, those things all pointed towards more bearishness to come, and those things already indicated that a breakout is more likely. We don't know before, obviously, a level is broken, so it's very important that we always observe how is the market reacting to the level. Do we see a strong breakout? Do we see retest, or are we immediately falling back and is this looking like a fake out? That's really the key. I would never predict a level breaking or holding before we actually see what is happening on the trading around the level. So that is a really important takeaway here. What do you think about this resistance level? How likely is it you think that we're going to break above this? How likely is it that this resistance is going to hold? By the way, this is a very important concept here. This is a fake out. The market already established the resistance here. And then because it looked so obvious, everybody was looking at it, the market tried to break out, and then within the next candle we reversed lower. This is a clear fake out signal, a very bearish signal. But let's focus on what is happening here on the right side. When we zoom in, you can see we have a very bullish structure here leading into the level. And you can see we are having higher lows, and also the price is making higher lows here in recent price history. So this is a very clear bullish indication. We have a breakout, very strong momentum sequence. You can see we have 1, 2, 3 bullish candles in this overall uptrend. You can see we have 1, 2, 3, 4, and we are in wave 5 here. Typically, this would be considered a completed trend in the Elliott wave theory. However, right now it still does look very bullish. We're not able to close above the highs, though, so keep that in mind. Here we can see we have a break and retest continuation pattern. You can see the market moved higher, closed out above the previous highs, continued lower, retested the previous lows, and was able to hold above it. The market is closing above the highs here, so a very bullish case here in this case. However, this completely changes on the next candle. This is a trap. This is probably the mother of all traps. This is super clear, and it's very rare that we have such a clear situation. First, the market looks like it. We have a successful breakout. Everything is pointing towards more bullishness. We have the breakout, we have the retest, so everybody is probably betting here on more longs. And the most important takeaway here is that it is fine to go long here or here on the retest. Totally fine, very, very understandable. You probably have your stop loss down here. You have your moderate position size, 1%, 2%, 0.5%, whatever it is. And then you're either taken out of the trade, your stop loss is hit, or you're manually closing the trade. At this point, I don't think there's any case for justifying holding onto a bullish position. This is now a very clear trap. The market made it look like it's going to break out higher, and then within one candle, it reversed all the way back into the pattern. So it is okay to take a loss. It is very normal to take losses. Even the best traders will frequently occur losses, and that is totally fine. The professional trader admits that now he is wrong. I think he was right before that, but he was proven wrong that now there is a trap. So his bullish trade idea is not valid anymore. It's not going to work out. You have to realize that. You have to be very objective and honest with that. So take the loss. It is totally fine to go long here, but at this point, it is clear that you are running into a trap. And at this point, this is a very bearish scenario. It is a trap. We have seen a trap previously, and now we had to get in higher above the level to make it even more trap-like. And you can see afterwards, the market followed through on the trap. So a very clear trap. And this is a very important lesson here. First of all, it's important to see how does a trap look like, but it's also very important to stay flexible, to stay open to changes in the market, and you're ready to change your trade direction or your opinion. If you're not ready to change your trade direction and go from being long to being short, totally fine, but you have to make sure that you cut the loss that you're sitting on if you're a breakout bull trader, and make sure that you're not completely ruining your account and taking a loss that is way bigger than what you initially anticipated. Because at that point, when the trap hits, there's no reason how you can justify still a long position. What do you see here when looking at this chart? We were in a downtrend, and the downtrend seems to have moved into a sideways range, right? We have our double bottom here. We do have a very weak divergence here. And it seems like the downtrend is over. Usually, if you see that a downtrend is going into a consolidation, consolidations don't take that long. And usually, if there's a continuation, the market is going to continue very timely. However, in this case, we have been moving sideways for a long, long time. So I would say, looking at this, that the likelihood for a bearish continuation is not super high anymore. Looking at it now, we have a breakout, very strong breakout candle. We are closing above all the highs here with a strong sequence. We are retesting it now. We didn't fall back below into the range. And here you can actually see this candle is retesting previous highs now as support and a perfect rejection. This is a pattern that some of my traders that I mentor trade. It's a very successful pattern, especially if maybe here's also probably some type of moving average. Maybe you have a daily pivot, maybe a weekly pivot. If you see retests into those areas in the right context, those are very high probability setups. And at this point, the likelihood that the market is going to fall back into the level is not super high. Yes, it's possible, as we have seen previously, but at this point I would say it's reasonable to be long. You cannot predict whether this is going to turn into a fake out or not. If there's going to be a fake out, we just cut the loss and reverse the position, but at this point I would say everything is speaking for a bullish continuation. If you want to be conservative as a retest trader, you don't get in here on the momentum candle after the level has proven to be holding as support. You could wait for the market to move into a new high. At this point, obviously, you get in a little bit later than compared to here, but you have a little bit more information and you can be a little bit more certain that now you can see we are continuing the way up, we are breaking into highs, and that is a continuation breakout. So at this point, very reasonable to be long here or have a bullish bias. And you can see afterwards the market did follow through. We moved into the previous supply and demand area here where the market is currently trading at. So very straightforward and clear example here at the end of this video. And overall, I hope you enjoyed it. I hope you got something out of it with all of those different trade and case studies. I hope you also learned that it's not only about price action, support and resistance and all of that, but it's also about managing a trade and also managing your psychology, being flexible, being open-minded, not getting married to a trading position, and being also ready to admit that you're wrong, because sometimes the market will show you the best resistance level, the best breakout. Everything is looking like a very secure and safe long breakout, but then the next candle, everything is changing and you have to reverse your position. You cannot get married to a trade and you have to admit that your initial trade idea was wrong and it's time to reposition. So let me know in the comments how you like this format, if you want me to do more of those, and I look forward to hearing from you.